welcome to the Deep Dive. Today, we are getting into one of the most confusing high-stakes paradoxes on the market right now.
Oh, absolutely. The FIGR dilemma.
We've got a whole stack of sources here, and our mission is to untangle these two high-velocity companies that somehow share the same name.
And it's critical to separate them. First, you have FIGR AI Inc. That's the private one, the robotics powerhouse with a valuation somewhere around $39.5 billion.
Yes, embodied intelligence.
Then you have FIGR Technology Solutions, publicly traded, NASDAQ, ticker FIGR. It's a Fintech company all about blockchain.
And that's the whole issue. Our sources show the smart institutional money is all over the private AI company.
But the retail money is flooding into the public stock, FIGR, and, well, often for the wrong reasons.
Two companies, two completely different models, one name creating chaos. Okay, let's unpack this.
We have to start with FIGR AI. They are all in on a vertical integration strategy.
Meaning they want to control everything from top to bottom.
Exactly. Centered on their flagship product, the FIGR O3 robot. They're targeting a release in late 2025.
And the brain behind that robot is where it gets really interesting. They're not just plugging in someone else's model.
No, this is their key defensive moat. They built their own proprietary architecture, the Helix Vision Language Action Model.
The VLA.
Yes, the VLA. And this is the critical unlock. It means FIGR controls the entire intelligence stack.
The whole pixels to action pipeline, as they call it.
Right. The robot sees something, understands a command, and then does the thing. Using that whole data flow lets them iterate way faster than any competitor relying on, say, a third-party model.
And the hardware is built to match. I mean, we're not talking about a simple machine here.
No, it's incredibly sophisticated.
Right.
The tactile sensing can register just 3 grams of pressure.
Which is the difference between handling a fragile egg and just, smashing it.
And then there's the wireless inductive charging, coils in the feet.
For continuous operation, right. That supports their whole business model.
It's fundamental to it. They're not selling robots, they're selling labor as a service.
Less, you pay for the hours it works.
And we know it's viable. That pilot program with BMW, it's now a permanent fleet deployment.
Which is why that $39 billion valuation, while it sounds crazy, is backed by some serious players. You've got NVIDIA.
For GPU access, which is critical.
And Jeff Bezos, through Bezos Expeditions, they're betting on FIGR scaling up that BODQ facility.
Which can produce about 12,000 units a year. It's a massive bet.
Okay, so that's FIGR AI, the physical automation play.
Yeah.
Let's pivot. What about the other FIGR? The public one, FIGR.
Right, FIGR Technology Solutions. Trading around $53 as of early 2026, this company is all about digital goods.
And their whole business is built on the Provenance Blockchain.
Yes. Their big win has been with blockchain-native Elay Loco's home equity lines of credit. It's all about cutting out the middlemen.
So what's the tangible benefit there? Speed? Cost?
Both. They claim to save up to 85 basis points per transaction compared to old-school lenders.
Almost a full percentage point. In the lending world, that's enormous.
It's a monumental efficiency gain.
But this is where the paradox comes in. We're seeing what the sources call the wrong stock effect. Retail trading forums are buzzing about FIGR, but they're talking about its robot potential.
It's a complete misattribution, a spurious AI halo effect that's inflating the fintech stock's valuation.
So how does that play out for an investor? Because FIGR is a healthy company on its own right.
Oh, yeah. It's profitable. They posted $29 million in net income in the first half of 2025. The problem is the stock is trading way ahead of analyst targets because of this brand confusion.
So if FIGR AI has some bad news,
then FIGR stock could take an irrational hit, even if its own fintech business is doing great.
So when you connect all the dots, you have this completely bifurcated ecosystem. Physical automation from the AI company.
And financial automation from the FIGR blockchain company.
Looking ahead, where does that leave FIGR AI?
Well, they're positioning themselves as this sort of neutral arms dealer for partners like BMW, but there's a huge shadow on the horizon.
A Tesla threat.
The Tesla threat.
Yeah.
If Optimus can actually hit a sub-$20,000 price point using Tesla's manufacturing scale, it could completely undercut FIGR's specialized high-end loss model before it even gets going.
So 2026 really is the year of truth for them. The glossy videos have to become gritty, reliable, 2047 factory work. If that BMW deployment expands, the $39 billion valuation will start to look cheap.
But if they stumble.
Exactly. So what stands out to you about the risk involved in scaling such a revolutionary hardware company, especially when a cheaper, good enough competitor might be just around the corner?